Hello, and thank you so much for tuning in. Today, we're going to talk about yield curves and specifically about inverted yield curves. Many investors believe that when the yield curve is inverted, that means when the 30-day or 1-year Treasury T-bill, T-notes, or bonds are paying higher interest rates than the 10-year or the 30-year bonds, right? Specifically the 10-year. That's indication that there may be troubles in the sign of trouble in the economy, and we may be going into a recession. The inverted yield curve has reliably predicted the last 6 or 7 recessions in the United States. And also in 2005, 2006, 2007, the yield curve had gone inverted before the recession or the Great Recession of 2008 and the financial crisis happened, right? So we're going to use the power of Excel to go and analyze this data for 2019 to see if in fact the yield curve has been inverted, right? So I'm going to launch Excel real quick first. So there's Excel. I'm going to go back to my browser and put Treasury yields. And the one you want to choose is the treasury.gov, right? Daily Treasury Yield Curve. When you click on that link, it's going to go and land on this page, but it's going to show you the current month for the month of June. But to be able to see this, you want to look at the entire 2019. So we're going to go ahead and highlight year 2019, click go, and it's going to load all the months, and then you got your various, T-notes, T-bills, and bonds yields across, in your columns. So now that you have defined your data source, you want to go ahead and highlight it and Control-C to copy it. After you've done that, you switch over to Excel, you click on data, get data from other data sources, and then from web. In a second or two, we're going to get a pop-up screen come up, and that's where you paste the URL. There you go. You choose the basic one, Control-V. There it is, year is equal to 2019. At the end of that link, you click OK. It's going to go ahead and connect back to treasury.gov, read that information, and pull it in. In this case, when it comes up, you don't care about document 0, you care about table 0. I'm sorry, you don't care about document, but table 0. So there's all your data loaded, right? Same information that you saw on that web page. And by the way, this works on any web page that has a properly formatted table, rows and columns, and data inserted. You click on load, and it's going to populate your Excel sheet. But just by looking at it, it's hard to tell if the yield curve has in fact been inverted. So what you want to do is you want to insert a graph. So what we're going to do is go ahead and highlight the first column, which is your date, right? We're looking at time series data. There's a date. Hold the Control key, and let's do the 3-month. We're going to do the 3-month, the 1 year, 1 year, 5 year, and 10 year, right? And if you're Excel expert, you know that you can also use the Control, Shift, and down arrow to highlight an entire column. And so I'm just doing it the hard way, but the easiest would be Control, Shift, down arrow. But again, at the same time, you want to hold the Control key, so we're choosing all columns. And I'm sure there are other ways of highlighting columns if you know Excel too well. But here's the limit of my expertise in Excel. So here we go. Now we got all 5 columns highlighted. We're going to go ahead and go to Insert. We want to choose Line Chart. Select that line chart, and there you go. So if you see, you got your blue line, which is your 3-month Treasury yields. You got your 1 year, which is your orange line, and you can tell that back in May 24th is about the time when it was paying less in interest rate than the 3-month. And if you look at the 10-year is your yellow line, and it was about the same time, May 24th, May 23rd, when it started paying less in interest rate for a 10-year. And normally if you're an investor and you're investing in T-bills and government bonds, you are expecting a higher return on longer term. So this is normally an indication that there's trouble, signs of trouble in the economy, and that's why investors watch the yield curve very closely on a daily basis. Again, thank you so much for tuning in.